Well, hello traders and investors. I'm L.A. Little and this is your weekly NeoTA wrap. We take a look at these markets doing it from a neoclassical perspective. That means we're looking at supply and demand on the charts where price is significant. We use those tests to figure out where the market wants to go next. That's what we do at TA Today. That is what neoclassical is all about, and this is the only place you will find that. If you're interested in what we do, just come over, hit the Get Started button, and see how you can become consistently profitable in these markets. I do the show once a week, every Sunday evening broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel L.A. Little. If you want to subscribe to this broadcast, just reach up in the right-hand corner and do so. Hit the Get Started button here to get more information about the programs we offer. As far as what these markets are doing, let's take a look at them. We'll start with the S&P 500. Now, last week, it was another flat week. We've seen this over and over. It continues to happen. It's not a bad thing. It's not particularly a good thing. It's just a thing. That may sound kind of corny, but when the market is doing what the market's doing, then you simply have to go with it. And right now, this market is on an upswing, right? You can certainly see that here in the charts. Swing point highs were broken back here on this time frame, on the daily time frame. You had another swing point high that was broken here. You can see that trend transition there. So you went from confirmed bullish to suspect bullish. Now, that doesn't mean the trend's going to end. It just means it will end a little bit sooner than it would have had it been confirmed. As far as what's happening, right, if you take that off and look at it, you really just have a consolidation taking place up here after a long consolidation took place back there. And so you've got these two consolidations going. You have some swing point lows that are down here. If they do break, you could get a deeper retrace. That's been the case for a while, continues to be the case. Now, if you pop over and look at it on a weekly time frame, right, you're doing all these little dojis now at the top. Now, typically, that sort of action says, okay, it's looking pretty tired, probably going to get some sort of a rollover, some sort of a retrace. So you can see it here. So a retrace back down, what would it do here if it did that? Well, first of all, it would come back into these swing point highs. And that's a bullish retest regenerate. So that's a bullish retest regenerate right at these swing point highs. And when it does that, and it does it after more than 6 bars, which is what would be happening most likely, that gives you a higher probability of actually finding buyers at this price point and regenerating, right? That's the regen part, regenerating back to the top side. And so, if you look at this on this perspective, there's nothing to be totally fearful of. You keep hearing Druckenmiller and who all else? I mean, there's all of these big names that keep talking about, how this market's going to crash and how they're hedged as large as they've ever been, or they're outright short. Soros has been in that camp and so forth. Well, maybe you're going to get a retrace, folks, but I don't think you're going to see a crash, and I don't think you should be worried about a crash. You should be worried about trying to stay on this trend as long as it wants to continue, and right now, it's still not showing you that it doesn't want to. And so from that perspective, you just stay with it. Now, if we move over to the Nasdaq's been even stronger. When the S&P was doing the consolidation back in this period, you could see the Nasdaq was still working higher. Now, it too is doing a consolidation up here. It also has those trend transitions on the way up that have moved to a red bar, meaning less volume on the breakout. But again, this doesn't look bad. The worst you can say for any of these charts is you've had a significant move already, and if anything, they might be rolling over and going to give us a retrace. Now, with the Nasdaq on the daily, right, you have a swing point low right here. That's this bar. You have others on the way down, but they're kind of spread out, and so that's actually a good thing. In other words, you could trend transition here, get a reset, and then take off again. And so I don't see this as anything but good if I'm examining these charts, and I think that's true pretty much across all the indexes. It's also reasonably true of the sectors. If you walk over to the world markets and take a look at those, that's where you see a little bit of a difference, and that's been true for a very long time. And what I mean by that is we'll walk over to Europe first. We'll pull up Germany, the big market, Germany has retraced deeper, right, than we have. Had a nice big breakout here, wide price spread, wide price spread, but not a high volume bar. But that bar, you know, I said at the top of the show, we look for significance. That's a significant bar. As it comes back into it, that is where you should see buyers attempt to show up. That is the breakout bar, and it's breaking out of this swing point high. So that's your bullish retest regen on the way back. I would expect buyers to show up in this zone. If they don't, then something's wrong, and that's how you measure the market. And so that's the next significant test overseas, and we might see that test this week. If we look at the Swiss market, which to me has been the best market for examining, you know, what's going to take place in Europe, that one has come in deeper already. And so if you look at it, you got over the swing point high here. You could not hold the bullish retest regenerate zone. You got up underneath it. What that says is it's going to change that trend, which had been up, right, to more of a sideways trend. And I believe that's what's going to happen. Now, when I look at this compared to Germany, that makes me think that Germany, in fact, could trade back in to that area we were talking about on the bullish retest regen. Same thing here on the CACs. The CACs, you actually have that bullish retest regen taking place immediately. When you do that, you usually get a test, a full retest. That's where it is now. We'll see if this one breaks down. That would give us another piece of information about Europe. And finally, if we look at the FTSE, which everybody was scared of on Brexit, the FTSE has continued to run after Brexit. Here's the big Brexit fallout. Nice big push all the way, 10% now since Brexit. That's an indication of the fact that you can't always judge news by the cover, right? You can't judge the book by the cover. You can't judge how market's going to react to news situations. A lot of times it ends up being exactly the opposite of what you think. Let's look over to the Asian markets. I'm going to take a quick glance here at Shanghai. So we got a nice, big, strong, wide price spread bar on Shanghai. You got over this swing point high. You got over this one as well. And so that breakout had volume and you had a wide price spread. That usually holds price. And so as this comes back into this area like it did on Friday, that's typically where you want to try to buy this thing and try to get the next push higher. That next push higher actually is here. You got a multiple swing point breakout. You got it on this time frame. Everything in China is looking up right now. It looks like to me it's going to try to trade to the next area of significance. That's these bars. That's up around the 3,500 area. That's a pretty good move. That's about 12% from where we're at. Asia looking up, Europe a little shaky, and that's the way it's been now for about 2 years. Either one is doing well and the other isn't, or vice versa. And that's primarily tied to what the dollar does. With the dollar weakening, Asia's benefiting, Europe isn't. And vice versa, if the dollar strengthens, you'll see the opposite start to take place. So speaking of the dollar, let's take a quick look at it and see what that looks like. Now, it did sell off pretty hard last week, but you started to see immediately the Fed members come out last week and start talking about the fact that maybe we're going to raise rates. So we'll be watching that closely. Yellen has a speech 11 o'clock at Jackson Hole this coming Friday, and I think that's going to be the key. Swing point low was broken. When you break a swing point, the immediate thing you want to think about is the retest regenerate. That's going to be the key area. That's where we're going to find out if the dollar really is going to strengthen or not as it bounces back into that area. And I expect that bounce to take place this week. How far it goes will give us a big clue about what's going to happen elsewhere. If you pull that across, you can see that's these bars on the way up. That's going to be a tough spot to get back over for the dollar. And so that's a key market to be watching this week. That will also give us more information. If we look at Europe and the FXE, this is why Europe's struggling. You've got the FXE traveling higher, going back up to test a swing point high. That test is going to be a difficult one to get over. You can see how it lines up. You can see the red resistance zone there. If it gets over it though, you can go all the way back to the top of this zone. And pulling that over on a monthly chart, you can see that you've got a zone back here. This is that high water mark we were just looking at. This, of course, has been the congestion consolidation area. Let me point that out while we're here. And then within that, you kind of got a bar that's about right across there. That's kind of been the middle of the zone. And I could probably draw that a little cleaner. And what I was talking about really is this price point here has been about the dividing line between the lows and the highs of that range. And so here, a failure there brings it back down to the bottom. It's in the top half of the range, and so right now you have to believe that it's going to try and test that top, and then that will be the decision point. So where do we think these markets are going to go based on what we know? Well, it looks like Europe's going to flop around more. Asia is going to attempt to push higher. Primarily China is going to attempt to push higher, not so much the rest of Asia, especially not Japan. And Japan, of course, isn't going to do it because of the yen. And if we look at the yen, you'll see what I'm talking about. Japan is still fighting to get higher on this yen. It's up here testing the highs, got over them on the daily, broke over it on the weekly, and on the monthly now, it's over this bearish retest regenerate zone. Top of it was 96.14. It closed at 96.50. So the yen is pressuring Japan. The weaker dollar is supporting China and hurting Europe. Where do we go next? Fed meeting. I suspect this week you're going to see, towards the end of the week, you're going to see the dollar try to push higher, and then it's all going to depend on what Yellen says as far as how does that translate into the equity markets. I suspect it isn't going to matter. They're just going to go sideways. Maybe you'll get a little push one way or the other, but they're still consolidating from what I can see. That's it for this week. Thanks for joining me. Have yourself a great one, and I'll see you next time. Good night.